Welcome to the Market Updates. Today, we're going to connect some really big dots. We're talking about global tensions, a huge shift in what central banks are planning, and how all of that could be setting up one of history's oldest assets for a massive, record-breaking run.
Okay, so what we're looking at here is basically a giant chain reaction. You've got these major geopolitical shifts, right? And they're forcing countries to form new alliances. Well, that puts a ton of pressure on central banks to change their game plan. And guess what? All of this, every bit of it, is pointing investors toward one specific asset that just loves this kind of environment. All right, first things first, let's zoom out and look at the big picture. Because what's happening around the world right now, well, it feels like the old rule book is being thrown out. And these changes are creating ripples that, honestly, every single one of us as investors really needs to pay attention to.
So, on one side of this global chessboard, you've got this ongoing standoff between the US and Russia. It's not going away. There's a lot of talk about more sanctions, but Russia seems completely undeterred. They're focused on their main goal, which appears to be full political control over Ukraine. This isn't just about territory. It's a long-term strategic move, and that tells you it's not going to be resolved anytime soon.
And then you've got the other side of this coin, which is just fascinating. It seems like aggressive U.S. tariff policies are having this, well, an unintended consequence. They're actually pushing old rivals like China and India to team up. I mean, them deciding to reopen border trade, that's not just some small deal. No way. It's a massive signal that a powerful new economic bloc is taking shape in the East, pretty much as a direct response to pressure from the West. So, with the world in such a state of flux, you have to ask, right? What in the world is the U.S. central bank going to do about it? When things get this shaky, everyone, and I mean everyone, turns their attention to one place, the Fed.
And that brings us to the Federal Reserve's next big move. This is the economic lever that could literally change everything. You know, the big question on every investor's mind isn't if the Fed is going to act, it's how far will they go? How many rate cuts are we talking about? The answer to that could really set the tone for the entire market for the next year, maybe even longer.
Okay, and this is where it gets really interesting. Just look at the difference in these predictions. On one hand, you have the U.S. Treasury floating the idea of, get this, 150 to 175 basis points in cuts. That implies something like 7 or even 8 individual rate cuts. That's huge. But then you have the big banks like Goldman Sachs saying, whoa, slow down. They're forecasting maybe 3 cuts this year and then another 2 in 2026, a much more cautious view.
But wait, there's a third opinion. And this one's a lot more skeptical. Some folks are looking at all this and saying, my view, the Fed will do 1, maximum 2 rate cuts this year. The idea here is that all this optimism might be getting way ahead of itself, and the Fed is going to play it much, much safer. So, with all these central banks getting ready to cut rates, where is all the smart money going to go? I mean, here's the bottom line, right? It doesn't really matter if it's 1 cut or 8 cuts. The direction is clear. Rates are heading down. And that leads to the million-dollar question. Where is the money flowing? And this is where it all comes together. The shifting alliances, the central bank pivot, it all points to one thing. Let's talk about the tangible outcome here, because all of these forces are building what looks like an incredibly strong, bullish case for gold. Check out this number, $3,300 an ounce. And here's the key. Analysts aren't seeing this as a peak. They're starting to see it as the new floor, the new foundation. The thinking is that the risk of gold dropping significantly below this price is just getting smaller and smaller. It's becoming the new baseline. And it's not just about a solid floor, it's about the climb from there. Look at this forecast from the Swiss bank UBS. They're mapping out a pretty clear path. They see the price really starting its climb at the beginning of 2026. Hitting $3,600 by March, and then pushing all the way up to $3,700 by the end of the year. But hold on, because even that might be playing it safe. Some of the more bullish analyses out there are suggesting that if these global trends really pick up steam, we could see gold hit $4,500 an ounce by the end of 2026. I mean, that is a truly staggering potential upside. Okay, so let's take a second and connect all these dots for your key takeaways. When you lay it all out, the story here becomes really, really clear.
It's really a simple path. Just 3 steps. Step 1, you've got this global geopolitical reshuffling. That creates a ton of economic uncertainty. Step 2, the Federal Reserve sees this and pivots. They start cutting interest rates. And step 3, you combine that uncertainty with lower rates, and what do you get? A classic flight to safety. And that is what's driving these incredibly strong, bullish forecasts for gold.
So that leaves us with one big question to think about, right? In a world filled with so much economic uncertainty, could it be that history's oldest asset is actually the future's safest bet? It's a fascinating thought. Thanks for joining our channel. Your subscription and likes will be appreciated.